kind of piggybacks onto that, and is now a good time to be investing in real estate. With prices being so high, it seems like we're in a bubble and a crash is coming. And if so, where do I invest my money at this time? I think it's a great question. You hear it all in the news. By the way, these questions have been great. And I appreciate you all sending them in. But first, I just want to address, is a crash coming or not? I am not a stock market guru. I am aware and I pay attention. But when I think of a crash, I think of a housing crash. And I look at the factors now and then, and they're totally different. Then being 2008. So no, I don't believe there's a housing crash coming. The price acceleration that we've seen will slow a bit. It has to, right? I mean, rent growth is 11%. Some counties had over 100% appreciation in homes. Like I'm thinking of Boise. And so, that's just untenable. But, unless there's a glut of extra housing nationwide, which there's not, there really can't be an imminent crash, if you will. I mean, 2008 was driven by folks getting ninja loans, the no income, no job or asset loans, adjustable rate mortgages that were 3-year balloons, that interest rates went sky high on them, over leveraging, horrible mortgage-backed security products. They defaulted and they caused a glut of real estate in the market. This time's different. We are 3 million housing starts behind demand currently. In 2007, we were 7 million overbuilt before the crash. So there is lots of demand for housing still. Interest rates will continue to be historically low, even if they raise it 5 times this year. Wage growth is very strong. Unemployment is almost back to a pre-pandemic level. There just simply aren't a lot of similarities between housing market now and 2007, 2008. That being said, I am very, very bullish on assets that cash flow. I think you may have picked up on that. Traditionally, multifamily has been an avenue that has been extremely good to me, and I'm still involved in multifamily, but it's been consolidated a lot over the past 10 years to where, probably 60% of the apartments owned by institutional type investors now. And when I say that, I mean private equity, I mean, large groups of buyers. So, probably 60+% of the apartments are owned by those types. So it's really harder to find and source deals. I feel with, the current rental trends outpacing affordability, witness 11% jump in rents last year, that mobile home parks are really an excellent asset class to be invested in. Whether it be the parks themselves, flipping mobile homes. I know that sounds crazy, but it's possible. I've done it. Investing in funds that purchase parks, lots of those out there, or investing in funds that are purchasing mobile homes and flipping them. So there's funds that are actually going out there, buying mobile homes, refurbishing them and flipping them to park owners like myself, and to people who need affordable housing. Or any other myriad of options that I'm not going to cover right now. I love the space, and Warren Buffett and Sam Zell are both heavily invested in the space, so that doesn't hurt either. That's good company to be hanging out with. As I mentioned before, there is lots of demand for workforce housing. It was astonishing for me to read that 20% of workers earn less than $20,000 a year. That means that they may be able to afford $600 a month tops. The average 2-bedroom apartment is more than double that. Municipalities, which have historically been very hostile to mobile home parks, we'll talk about that a little bit later, they're finally addressing this issue. 2 cities actually eliminated, I wish I could remember what the cities were, but they actually eliminated single-family housing zoning in 2020 because they understand that we're in an affordable housing crisis. We are doing a project in Blackfoot, Idaho. We're doing another project in Charlotte where we've actually got in new entitlements to put in a affordable manufactured home community. And that's because we kind of went in and we showed them what it would look like with an old mobile home park that we refurbished completely. And so we kind of proved the concept, and then they were all on board. So I think that there's some give and take here between cities and developers that can really meet this affordable housing crisis. But suffice to say, we are very underbuilt for the poor. And you know, if people worry about a bubble, like we were talking about before, you know, there is a lot of demand for workforce housing. I just don't see a 2007, 2008 scenario coming. You know, and mobile homes also are the least expensive form of detached housing by about 6 times. And, you know, you can buy a mobile home for $50,000. The average house, depending on where you are, you know, you're going to pay $300,000, depending on which parts of the country you're in. So I can infill manufactured housing communities much faster and more economically than I can build single family homes. So it's definitely the least expensive form of detached housing. They're very high cash on cash returns, and that's because these assets are selling, at least right now, at a higher cap rate. So their cash flow is excellent. But you know, that's changing as more people enter into the space. I mean, people are seeing this, and more people are entering. I mentioned earlier, you can rehab and flip mobile homes. You know, you can get a mobile home for $1,000. You can put $10,000 in it and sell it for $40,000 or $50,000. This is not something I would recommend, you know, you swinging a hammer and doing this, but you can get contractors. And as I said before, you know, there's funds springing up doing this work. I just had a preliminary meeting with one last week, and we're going to follow up and circle back. I may be bringing that to my circle as an opportunity to invest in something like that. It's still easier to get a deal in mobile home parks. I think a deal to me is 70 cents on the dollar. You know, if I can get something, $1 million asset for 700,000, I think that's doing pretty well. Because there are literally parks everywhere except Alaska and Hawaii. Unfortunately, there's no mobile home parks here, so I can't write this off in that manner. But there's still these parks are still owned by kind of mom and pops who aren't necessarily professional real estate investors as much as they are just operators and kind of lovers of their park. You know, they kind of, this is their baby, and they're more reasonable in what they'd sell the park for because they have some flexibility. Most of them don't have loans, so they're more than willing to do seller financing. And if you can, we had 2 parks where they just basically, you know, financed the whole thing. We had to give them a sizable amount down, and they financed the rest. Well, at that point, that's a non-recourse loan. You know, you don't have to bring a bank in. I guess some of the bad things you all already know. They don't have a great reputation. I just say you got to get over that. And there's systems that you can implement that are out of the scope of this discussion. And I know we're running out of time here, that can mitigate it quite a bit. And, you know, we all learn as investors, live where you want, vacation where you want, but invest where it makes sense, invest where it makes money. So mobile home parks right now, I think, are one of those places. You know, they've got some failing infrastructure, so you're going to need to know your due diligence when you go into this. That's where partnering with somebody who knows what they're doing is great. Cities don't necessarily want them. I told you that's changing, but just think about it. They're packed with kids. And they don't pay any property tax. You know, these mobile homes, they're chattel, they're considered cars or RVs, and they're all valued at, you know, maybe $10,000 to $20,000 at most. So think about that, doesn't generate a whole lot of property tax revenue for them. And each kid costs $7,000 to $9,000 a year to educate. So municipalities don't like mobile home parks. And there's the reputation. Bad things happen in mobile home parks. But I guess another one would be, there's not a lot of national property management companies right now, but I think that's just because it's not consolidated enough. There's not a lot of, you know, larger investors that are invested in and wanting them to be third party managed. I think they're coming along. There's one out there, M. Shapiro is one that comes to mind, that does large park management. So I think that's going to be coming around very soon. The different tenant base, we talked a little bit about that, but I think a lot of that can be mitigated by turning park-owned homes into tenant-owned homes. When they have more pride of ownership, you'll see less trashing of the mobile homes, less leaving things outside, less, you know, they'll manage their skirting well. Just the whole area around their homes start to look better when you give them pride of ownership. And we give all of our tenants a pathway to ownership. That can be something we talk about on a later time. Lending is difficult. for mobile home parks, but like I said, a lot of them can get seller financing. There are groups out there, Security Mortgage Group comes to mind, and non-recourse lenders are jumping into the space as well. Inventory is a big deal because if you can't get homes, you can't put people in them. And with demand and the supply chain issues, you may have to wait 6 months or more to get a home in your park. And that makes infilling very, very difficult. But like I was telling you about earlier, these, where the invention, or excuse me, necessity is the mother of invention. So we've got funds springing up now that are buying these old homes, refurbishing them and selling them off to parks to try to kind of ease that demand. So there are definitely ways to passively invest in this asset class, or actively invest in this asset class, or invest in ancillary funds all around it. It's a really dynamic space right now. It's pretty exciting.